So I'm curious, how did someone get a credit card at 17? Was it you became an authorized user on a parent's card? If anyone's willing to share that? Okay, so authorized user. So didn't actually get your own credit card. Gotcha. So 18, freshman year of college, sometime in college. I probably am on the complete opposite scale of all of y'all. I waited till I was 42 to get my first credit card. Just did. You'll see some of that in a little bit. All right. Let's switch back over to the actual presentation. Okay. So this is not going to be a presentation about actually credit cards alone. I just started with that question because it's most people's entrance into credit is their first credit card. Again, I'm atypical in this, but most of y'all probably started around 18. You maybe started as you were at some point in college. Maybe some of you don't have a credit card yet, and that's fine. But we're going to go into overall credit strategy. What actually is credit? Because credit is not just a credit card. There's a lot of ways to get into credit. We will talk about credit reports in detail. Credit report, in my opinion, far more important than your actual credit score. Credit score, as you can see here, is only really what you can see at the end. But it's built off of a lot of different things. So we're going to go over every single piece that is in that credit report, as well as how you can get access to that. We're going to talk about your actual score, what you can do to improve or keep the score good, some weird things that happen with credit scores from time to time, and then we'll have time for questions at the end. So pretty normal format. But if I had to ask you, how would y'all define credit in general? Borrowed money. I would expand that maybe a little bit. The ability to borrow money. So the ability to spend without handing over money at hand. So it's not always just what you've borrowed, it's you have the ability to do more. And that's actually a key factor of credit. In the olden days, it was, credit kind of started out in an agrarian system where I went to the general store, I bought my seed to plant on my land on credit that crop would then produce, and I would pay them back either through product or through money I made from selling that product. That was early on. As far as an industry goes, the actual credit card industry didn't really get huge or even really come into play in a large scale until mid-1900s. And they haven't been around all that long, despite the fact that y'all have grown up with them. For my generation, credit cards are kind of like computers for y'all. My parents didn't, well, my parents did, but my grandparents didn't really have credit cards growing up. It wasn't a part of their lives. It came into play for them. For me, computers existed, but they didn't become ubiquitous until around the time I was in college. And that's about the point when everyone started getting computers. Dudes, you're getting a Dell was really popular back then. Well, credit cards were the same for your grandparents or your parents, depending on how old they are. So let's jump into it. The ability to obtain good or services before payment based on the trust that payment will be made in the future. That's the actual definition from the dictionary. But the ability to pay without, or the ability to get an item without having actually paid for it. And other extended credit. Debt, this is what you were talking about, more accurately debt. Something, again, typically money, that is owed or due. Why is it sometimes not money if we're talking about a debt? Taking us off of the topic a little bit, but I'm just curious, why do I have to specify that it's typically money? What else could your debt be? Time. I forget who's on the HPSB program here, but you've got a debt of money. a debt of time on HPSB. And if you choose not to give them their time for whatever reason, you owe them money. My kids owe me a debt of chores. They start talking about an allowance, and I remind them I allow them to live at the house. But they owe me a debt of chores. We were having people over this weekend. They had a lot of chores to do to catch up on because they had gotten behind on their debts. Well, that's just as punishable for them as it is for us if we get behind on our financial debts. So if a debt is secured versus unsecured, these are key things. These are things that greatly drive your interest rates on most things, although I will tell you credit cards are always just going to have a high interest rate. But a secured debt means that something can be taken back. Your auto loan, your mortgage, those are secured debts. Secured debts typically have lower interest rates because there's something they can get back. They got to show up to your house to take it, or they got to take you to court, but they can get something back for it, and they can recoup their losses. So their risk is not as high, so a secured debt is a less risky debt. Unsecured debts, on the other side, are not backed by anything physical. There's nothing they can take back. A really good example for y'all is your student loans. We can't reach into your head and take the knowledge back. We just can't. The private lenders, if you had a private student loan debt, which I generally don't recommend, cannot come and take your degree. They can take you to court for a lot of things, but there's nothing they can physically show up at your house and take that is worth any value to them on an unsecured debt. That's why even though we complain about the interest rates on federal student loans, those are still unsecured debts, and they're really good rates for unsecured debts. Even right now, where we're complaining horribly about the mortgage rates at like 7-8%, well, they can still take my house and things like that. It's still better than what you get on the private student loan market, where you're looking at 12 to 15% in a lot of cases. Maybe 10% if you've got a really strong cosigner. But because it's unsecured, much like credit cards, where they can't just typically walk into your house, they can't come into my house and with the card that I use to pay for my food for the parties we had this weekend, they can't come in and take that food. They can't give that back. So if I allow that to fester for a month, they're going to charge me whatever my interest rate is because they're taking a high risk on that. There's nothing they can get back. And your credit report. This is a list of all of your credits. All of the credit offers that you've had, everything that is active, everything that has closed in a certain amount of time. We'll go over some of those dates in a minute. And so what's just a good strategy in general? I kid you not, common sense. So if I owe something, pay it, and pay it on time. If I've agreed to it, I owe it. Y'all agreed to come to this meal. You don't actually owe me a debt. You agreed to come to this lesson. I got you food. In some ways, you have a debt. It's not a very well-constructed debt or anything like that, but you agreed to come. I provided something for it. You came. You have fulfilled that debt. You have earned this food by showing up. So you showed up on time, which I appreciate. So if you owe money, you pay it on time. If you owe time, you pay it back on time. Otherwise, they're coming at you a different way if we're talking HPSB. Don't borrow what you can't pay back. This is just good credit management. If I can't afford it, if I can't pay it out of my bank account right now, I should never put it on the credit card. We'll come back to that one, especially on Thursday. So if you're signed up for Thursday, which I think we had a lot of duplication between the 2 days. Understanding, of course, y'all do have an exam at the end of the week. So if I can't pay it back, if I can't pay it right now, it's not a good idea for me to put it on a credit card. There are a couple of exceptions to that. Not a lot, but a couple. Again, we'll talk on that coming Thursday. If it's something like a house and a mortgage, of course I can't put down $300,000 right now. I work for the state. Y'all are students. You can't afford it. When you become a resident, you can't afford $300,000 right then. But I do know that based on my contract for my employment, I can afford those monthly payments. So I'm not going to take out something I can't afford. I'm also going to make smart decisions and not buy the house that the bank says I can buy. I'll buy the house that normal advice says I can buy, because the bank's going to allow you to use 50% of your income per month to pay that principal and interest, not even counting your escrow. That's stupid. Do not ever get to that point. That is what we call house poor. But on the other hand, if I spend a quarter to a third of my income on that house, I can pay that back. That's going to be okay. And avoid the limits. It's kind of what I was talking about with the bank. We don't borrow up to the limit of what the bank says we can borrow. We try not to borrow our student loans up to the cost of attendance limit. This is a slightly different reason, but that means that we get no flexibility. If we can avoid borrowing at the limits, do so. Don't borrow at the limits of your credit cards, because chances are, if you're reaching the limit, there might be some other spending issues going on. It does happen from time to time, just in a crazy months. Like I had a surgery early this year. I put that on the card and then I paid it off. The money I put on the card took the card almost up to the limit. I wanted those points. Dagnabbit, that surgery is going to pay for a flight. Just is what it is. Got to earn the points. But if I had left that up at the limit, I would have killed my credit score, which again, we'll come back to. So do you need a credit card? What do y'all think? Do you need a credit card to have good credit? No. I'm going to say it depends. Like I said earlier, they're usually most people's first step into the credit industry. You turn 18, what we've been conditioned in, and again, remember this is a really new area of finance is credit cards, especially credit cards that you can use anywhere, not just at particular stores. Because when I was growing up, all the stores were hawking their credit cards. They seem to have stopped doing that largely now. Although Apple and Amazon have really jumped onto that, because where do people spend all their money? Apple and Amazon. Venmo's trying to do it now too. But they're usually people's first steps. And so if you don't have one, you can still get other credit. I bought my first 3 houses having never had a credit card. My wife was able to secure a student loan to cover her violin, having never had a credit card, by the way. Don't let your kids start playing violin professionally. It's really expensive, unless they're just that good. My wife is, but she got scholarships, and we paid it back with them. But, again, you can do all this without a credit card if you want. So we're going to come back to what you do if you have one. And so here's an actual example. This is me from about 2 years ago. This is my credit scores. And remember, I think it's 860, 850 is the max. Anything over 720 is considered what they would call prime. Well, having never had a credit card, my scores were doing pretty darn good. We had auto loans, we had mortgages across different times. It's kind of the only debt we had ever had at that point, the only lines of credit, period, we had ever had at that point. And so it is doable. It's going to take more time, and it's going to take more intentionality. Can you do it? Yes. Do you need to do it? Not necessarily, depending on your ability to control your own spending. I personally have a problem with cash. Cash doesn't really exist to me. It's not in the bank account. It's not recorded anywhere. If I have cash, it's not real money. It's monopoly money, like y'all treat your student loans, or unfortunately, I've heard some of the M4s call them Casey bucks. It's terrifying having my name attached to that. But I thought for the longest time, until I could get spending cash under control, I would treat credit cards the same way. Eventually, I got to where I was comfortable, and I trusted myself enough to do it, and it's proven effective. If I know I'm bad with credit cards, a credit card could be the worst thing that I do. But if I'm really good with my monthly spending, if I'm great with my budgeting, if I pay it off every month, and I'm never behind on my debts, I'm never running over, I'm not impulse buying a lot, okay, then a credit card might be a good option for you. So if you already have a card, keep it. We're going to come back to why later. And if you don't have a card, it's up to you. You can decide, do I get a card now? Because I'm starting to think about third and fourth year, especially fourth year, away rotations, travel for after I graduate med school, before I start residency. I'm going to get married. We're going to have a lot of costs that'll be up and down. That'll be a great way to earn some points, pay for that honeymoon a little bit more cheaply, whatever the case may be. Whatever trips you want to go on, however you want to use this, away rotations, hotel points, whatever. There's a million different ways to do that, and we'll talk about all that on Thursday. But it's up to you as to whether or not you get one. Don't let anyone tell you you absolutely have to have one. Even now, when I finally have, at my current age, gotten one, I would tell you I don't need it. I'm earning points on money I was spending anyway, so it makes sense for me, but I don't need it. My credit score is not hurting. All right. So, you see I got creative with the med school thing, the anatomy of a credit report. I'm nothing if not corny. Every single one of these things is an item on your credit report. And I won't call them a line item because most of them are multiple lines. And so all of this goes into that one 3-digit score that you get. That, by the way, for some reason starts at 300. You can't be below 300 on a credit score. None of that ever makes sense to me. Like, what's the range? Why do we start at 300? I don't know. But all of this goes in. And so let's talk about them. Personal information. Believe it or not, this can be wrong. A friend of mine has a very common name. He actually found out that some credit reporting bureau was reporting credit or information on his report that was not his. Now, good news for him, this showed up when he was doing a mortgage. That person had a great mortgage, great credit cards. They were bolstering his score a lot because he had some bad history in the past. And it helped him get his house that he was in at the time. That's not always the case. So when you pull a credit report, the first thing they're going to put on there is, hey, this is you. This is who we say you are. This is what's showing up under your name. Some of these things, none of them should come as a shock, but sometimes you'll be able to see like your cosigners and things like that on other things here. To go, hey, I don't actually have a loan with that person. I don't have a credit card with that person with their name on it. So maybe you're still on mom's card as an authorized user or something. Like, oh, no, we shut that down years ago. You may and may not consider updating that if it's someone you know. If it's like someone you don't know, we'll get to disputes in a minute. But who are you? Does all of this line up? Because this is what they're going to use to determine if any other credit inquiries come in belong to you. So your personal statement. This, for a lot of you, is blank. There's not going to be anything here. But how many of you have gotten caught up in any of the credit hacking things and the identity theft in the past few years where you get the letter, you get the email, hey, your account has been hacked or your password has shown up in one of these hacks? And pretty much everyone here. And it's going to be like, okay, they're offering me free credit monitoring. That's not a bad thing. That's actually a pretty good thing. Now, flip side of that, there are scams that will say, hey, your account's been hacked. Follow this link, put this out there. No, go through things the right way. And like, if you're ever getting one of these, go straight to the program or the place that they're saying is offering the monitoring and start there from your own Google search, not from the link on the email or the text. That's just basic identity theft protection. But you can put identity theft on here. It'll just say, hey, you've been the victim of identity theft in the past if you've put that information out there on your own credit report. If you've put your credit on monitoring, they'll put it out there. If you've put a lock on your credit, one of our students actually had that this year and they freaked out because they applied for a Graduate Plus loan and it got denied. Oh my gosh, Casey said they never get denied, and they don't, really, hardly ever. Less than like half of 1%. And then about 5 minutes later they went, oh yeah, I put that hold on my credit because my account got hacked last year. And so they went and released it. They reapplied. 5 seconds later, they had the approval. They put the hold back out there because they wanted the hold still out there. And so by checking their credit report, they would have already remembered that that was the case. Although if they're like me, they probably would have promptly forgot again. But it's fine. A hold is not a bad thing if you're the one that placed it there. All right, what's next? Potential negatives. So these are the things that are going to hurt your score. If you've got things showing up on this, which, again, most of yours should be blank. Like this person here. Let's see. Will that work? Oh, yeah. That's fun. This person in 2015 was late on a card payment. Since then, they've been fine. But right now, that is still hurting their credit. They were 30 days late on a payment. Probably just switched bank accounts or something stupid. But on-time payments is a huge part of your credit score. So right up until this month, that is still hurting someone 5 years after the fact. Ooh. Now, once that rolls off, it no longer will be an issue for them. And their credit score is going to go straight up. There may be other things here. Bankruptcy, inquiries on your credit, hard checks on your credit. So a soft check doesn't really hurt it, but a hard check, like you're actually taking out an account, will show up in this and say, hey, you applied for blah, 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 blah. It's a good way. This is a good place here to see anything that may be negatively affecting your credit just really fast. Like, oh, hey, no, I didn't apply for a credit card or any loans during that month. Let me call and dispute that, or let me email and dispute that. And then you get into the accounts in good standing. For most of you, you will have items on this. If you have student loans, you have accounts in good standing. If you have student loans and they're not showing up on accounts in good standing, we need to be meeting. We need to have you talking with your servicer because they should be in good standing. And so this will be your student loans. This will be your credit cards if you have them. This will be mortgages, which most of you don't have. Auto loans, which a few of you have. Any other private accounts that you have, that Amazon card, the Apple card, the Venmo card, whatever that may be, will show up all on here. If you've been offered a line of credit and it's good, it should show up here. Now, this is where my buddy found some things that were not his, which he didn't dispute again until after he got the new mortgage. Hey, it worked for him. And so if there's something on there that's not yours, you should go ahead and dispute it because that's something you have no control over. Even if it's currently helping you, that's not to say that John Smith down the road, whose mortgage is showing up on yours, isn't going to lose his job tomorrow and tank your credit by not paying his mortgage and getting foreclosed on. And it's a lot easier to get something out of dispute if it's good standing than if it's negative. Because if it's negative, it looks like you're trying to dispute it just to get a negative off your account. If you're disputing something in good standing, they're going to start with the assumption, hey, you're being honest about this. Like, hey, no, this actually isn't theirs. The documentation will still need to be provided, but they're a little more understanding on it. And then here's your inquiries. This is another good place to find out if your identity's been stolen. When you pull your credit report up to 3 times a year, again, we'll come back to that, you'll be able to see any time someone's done a credit check with your name and social and date of birth. This is why when we're talking about things and being safe online, you're never putting your name, social, and date of birth on something that you didn't initiate. If you're following a link that someone else sent you, they don't need that information. Period. End of story. I'm going to tell you, don't even do it. Like if the school's sending you an email saying, go do your FAFSA, with AI, it is so easy to spoof a FAFSA website. I could send that to all of you, have all of your socials and dates of birth and everything in a matter of seconds, and then go steal all your identities. Am I going to do that? No. But it's very easy for someone to do that. It's very easy for someone to spoof my email address and do that. We saw it last year when the dean's phone number and email got spoofed, and she was asking for people to go out and get gift cards for an event happening that day, or for a student, and hey, I'll pay you back when I see you next in the office, sort of thing. Someone spoofed our dean on that. Very easy to do, make it look really convincing. They don't even have to work hard anymore. Good gracious. All right. Messages and rights, this is going to be the same on all of you. Like, you have the right to receive this report up to 3 times a year, blah, 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 blah. By the way, one thing you'll notice on this, you don't actually have a right to your credit score. Does that make sense to anyone? You have a right to all the information that goes into your credit score, but you don't have a right to the actual score itself. Why might that be? Anyone have a guess? It is, and because they calculate it differently, they have developed their own proprietary requirements on that. It's the same reason why whatever food you're getting doesn't have to say exactly all the spices that are on that. They just have to say spices because that's their proprietary blend that they've put money into developing. And so, your FICO score, it's pretty well publicized what goes into that, but I doubt you could hand calculate your own. You can get a good idea, but probably not down to the point. Your own bank is going to have its own way of looking at it. The federal government doesn't actually look at your credit score, despite things like the Grad Plus having a credit check. It just looks for what's called a lack of adverse credit history. But every one of the three major federal reporting bureaus has their own proprietary formula. They're still required to give you your credit report, but they don't have to give you the score because they put money into developing that. And so you're not entitled to something that someone else has put money into developing. It's kind of the way it works because they're private companies that we've put this requirement on that you have to be able to get a credit report from. All right, so disputes. This is where you're going to see any active disputes. If it's already been resolved, it'll still show up here, but it'll say resolved. So if something's wrong on your credit report, you dispute it. It's going to tell you how, blah, 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 blah. One of three things can happen, and this is important. Incorrect information will be corrected. The onus is on you. You have to be able to prove that that wasn't you. I've never lived in Texas. I obviously don't have a mortgage in Texas. I have never applied for a credit card, period. Well, that one's actually harder to prove. But hey, that's not my address for that. And that might make it possible to prove you've never lived at an address. Information that cannot be verified will be updated or deleted. We actually saw this back in the mortgage crisis of, I think, 2008, where mortgages were there and they had been sold so many times, no one could produce any documentation that they owned the rights to that mortgage or that it was even a legitimate mortgage. And so some people had success on getting their mortgages actually discharged because of bad information or missing information. That's not going to happen anymore. Sorry, you can't. No good luck on that one. Information is verified as accurate and will remain intact on your credit report. You could dispute something that could be entirely wrong, and because there's no information that they can have to disprove it, they're going to say it was accurate. Period. End of story. And your only recourse, you can take it to a next level, but it's going to be the same people reviewing it. You can also dispute it with the other two major credit reporting bureaus. And so it drops off of two of them. Most banks are going to be looking at some sort of a mix between all three and their own proprietary formula as well when they're looking at things. So that's the three possible outcomes from disputing something. Worst case scenario, eventually everything drops off your credit reports. Even a bankruptcy will drop off after 10 years. But that's a long time that if you can't get something off there that's bad, for it to sit there and be affecting your credit, especially in y'all's points in your career. For me, I'm not planning on moving. It wouldn't be a big deal for me if something was wrong on there and it took a while to get off. Y'all graduate in 3-4 years, going to be moving for residency, may want to buy a house, maybe applying for a new place to rent, may need a new car at some point. Getting disputes handled early will be vital for you. And having all the possible information that they may need when you submit a dispute is also vital. Because again, you only get so many times. It's not like, oh, I can send you this. Well, next week I'll send you that. No. Whole dossier together. Get it ready. Get it out there. All right. So let's go to the next question here. I want to see what y'all have to say before we actually get into this. I'm really curious, what's the most efficient way to increase your credit score? Any questions on the reports while folks are answering on this? All right, on-time payments, pay back on time, pay bills on time, pay bills on time, pay off debts. We're actually going to talk about the pay off debts one. Sometimes that hurts you. I got a good example of that. But yeah, pay back lickety-split. I'm going to assume that most of that's spelled correctly. I've never actually spelled lickety-split before. Car loans. Are we saying have a car loan or don't have a car loan? Have a car loan. Okay. It helps. So you're talking about varieties. They have different varieties of credit. Yeah, definitely. That's a big one. All right, so let's jump into it. Forget the mouse doesn't work up here. Okay. So what goes into it? The amount the payment history, payback on time, which most of you said, is going to be the largest factor in your credit score. It makes up 35% of the potential 850 points. The amount you owe versus the other credit extended, it's a key factor there, we're going to dive into it more, is going to be the next largest factor. So between those two items, that is more than half of your actual score. How much do you owe, and do you make payments on time? Now, your student loans are kind of an interesting thing. They're there, but they're also kind of not there, all at the same time. They factor heavily into a debt-to-income ratio that a bank is going to be looking at beside your credit score, but until you enter repayment, they don't truly have a horrible effect on your credit score. And if you enter repayment and you make all your payments on time, you're going to be okay. So next thing, length of credit history. That's a big one. Remember how I said earlier, don't cancel cards if you already have one? There's a reason for that. And then new credit and credit mix. New credit doesn't mean I'm applying for new credit all the time, and that's why my credit score goes up. Although maybe that is a factor if I'm applying for a new type of credit, but that more falls on credit mix. We've got some examples on this. Having a limited number of new credit applications each year or in a certain period can increase your credit score. You don't want to constantly be seen as applying for new credit here and there and all over the place. But, all right, let's jump into it. First and biggest, do you keep your accounts in good standing? If you have a credit card, are you paying it off every month? If you're not paying it off every month, are you at least paying the minimums every month? Which, by the way, if you're paying the minimums, it will take years and years and years to pay it down because your interest rate average on a credit card is about 25%. Means across, if you take 4 years to pay that off, you've paid more than double in 4 years. Your mortgage takes 30 years to pay double. A credit card will take 4 years to pay double. Ouch. So, are you in good standing? If you're late, how late was the card? Was it within a grace period, 4 or 5 days? Was it over 30 days? That's a negative one. And did you just maybe never pay it? Because you switched accounts and you forgot about something. So the biggest thing, like you all already said, is pay your payments on time. That right there is 35% of your entire score. If you're going to do nothing else, pay your payments on time. That will keep your credit score at least in pretty good standing. So then, what are the amounts that we have owed? How much available credit do I have? So this is where that potential to borrow more that we talked about at the beginning comes into play. And what's my actual usage? So if I'm person one, scenario one, I have a $1,500 balance on $1,750 of my card limit. What is my utilization ratio on this? How much of my available credit am I using? You might need a calculator on that one. And I'm going to trust you because I did not do the actual math in a few minutes ago, at least where I can remember it. 85%. I've used 85%. And by the way, this is a balance that carried over, not one that we just currently have on there, but it carried over to the next month, so it actually showed up on a credit report. On the other hand, what if I'm person number two in scenario two? My balance is still $1,500, but what's my utilization ratio now? $31%, which is better. Which is better? 31%. Scenario two, person two. Why is it better? We owe the same amount. Why does that improve? Why would scenario two be a better credit score associated with that? Why do you think? So it's a lower utilization rate. And what it's telling credit companies is you have been extended a much greater level of credit, whether you're using it or not. You have been entrusted with more debt that all these various companies say you can pay off, despite the fact that you're carrying the same balance as person in scenario one. And so that's why I would tell you, if you have a credit card, periodically give them a call and say, hey, I'm thinking about making a big purchase. I don't care if you're thinking about making a big purchase. You call them and say, I'm thinking about making a big purchase. It's a little bit above my credit limit. Can you increase my limit? My credit limit's $5,000. Hey, I'm thinking about spending about $3,500 on this thing. Can you increase my limit to $4,000 so I don't have to do it on 2 different cards or something like that? Well, automatically you've done nothing. You've changed nothing in terms of your debt, but you've improved your credit score because you now have a higher limit that you're using less of. And so do that periodically on all of your rotating accounts being credit cards, or, could be like a HELOC or something, but most of y'all are not on a home equity line of credit at this point. That is a good habit to get into. Set a reminder on your phone, like every 2 years, call and ask for a credit limit increase. Chances are they're going to give it to you up to certain limits. I mean, it'll be easier once you're actually out and working as a resident. They'll be like, heck yeah, you're a doctor now. We want to give you all the limits. You want one of those fancy, really heavy metal cards? Okay, we gotcha. First time I ever held one of those was when one of my bosses was paying for lunch, and he's like, here, take this. I'm like, dude, that card, when did they start making cards out of this? It's also got the big warning on the back, do not send through a shredder. Now everyone can get those, but, back in the day it was really, really fancy. But the amount I owe is honestly less important about the amount I owed, even though we call it amount owed. It's more about your utilization ratio. The better your ratio, the better your score. So more accurately, the lower your usage percentage. If you can show $8,000 in credit limit and 0% balance at the end of the month, that's awesome. That's perfect. That's exactly what they're looking for. If you're carrying over a balance, hopefully it's a very small one and you have a higher limit. Otherwise, what starts out as a positive of having a high limit becomes a negative because your debt went up to that limit. So, and that's 30% of your score. So, credit history. How much and how new? Too many new accounts looks risky. It looks like you're having money problems and you're borrowing here, there, and everywhere just so you can make ends meet. So if I'm applying for a mortgage and I've got a mortgage going on, we hear this all the time, don't also go and apply for an additional private student loan or residency relocation loan. It's a talk I have with my fourth years all the time. They're like, Casey, well, I'm applying for this mortgage, but I've got to make a down payment. Look, I totally get that. Apply for the residency relocation loan or whatever you're going to get before you apply for the mortgage so that you can be transparent about them. Yes, this was a school loan, not a down payment loan. It was a school loan for school. I'm still in school. I now have this contract for residency. Okay, we can explain that one away. If you do it in the middle, the underwriters are going to get a hold of that and your mortgage is going to run into issues. They're going to be like, hold on, we need like all this additional documentation. You may not be fully shooting yourself in the foot, but it looks bad because we've got too many new credit applications at the same one. It really does look like we've got some bad issues. And so here's an interesting one. This is me. Again, I like using myself for examples because I can complain about myself. This is what happened to me between last November and last December. What on earth do you think caused me to have a 23-point drop in my credit score? It was not getting the credit card. That was this year. What do you think? Any guesses? Didn't have a card until this year. That was before this. Or this was before that. I did. I paid off my van. Finally owned that big purple dinosaur that's sitting out front, or at least that's what we call it. I had to park out front today. It doesn't fit in the garage. So, yeah, don't report me on that one. But I paid off a debt. I'm now $4,000 less in debt because that's what we owed on that car in November that I just paid off. Okay, that normally sounds great, but what happened? I now lost some of the age on my credit because that loan had been out there for a few years. So I lost some age. I don't have any new credit at that point to offset it. And also, I now don't show quite the utilization ratio because we talk about credit cards a lot with that because that's a revolving account. It changes every month. But I was offered X number of dollars, and I had paid it down to Y number of dollars. That shows that I have the ability to pay down debt, and my utilization of that debt line of credit was pretty good at the time. It was constantly declining, as one of those payments should do. A car loan or a mortgage should never be going the opposite way. That'll kill your credit. But that's what happened. Now, something like this will bounce back generally after a couple of months. It looks just really weird, and because of the way credit scores work, another way of thinking about a credit score is it's a score that shows how good you are at being in debt. That's borrowed straight from Dave Ramsey. And so if it's showing how good I am at being in debt, between November and December, I got worse at being in debt because I was in less debt. Again, it's going to bounce back. And it did. And so that's where I was saying. Length of credit. This is a different way of looking at my credit score. All of my stuff is good except my credit age. Well, I lost age on that car loan, and then this one's actually from today. I pulled it today just to see what it looks like. And because I have a new credit card on there, that credit card is not old. How old are y'all's oldest accounts? Does anyone have an account in their name that is longer or that is older than 8 years? Anyone? Probably just me. So by that, all of your credit is immature. You may not be showing a grade C, maybe you're a grade B because it's at 5 or 6 years. But because I have that brand new card that's only about 3-4 months old, only 2.5 months old at this point, I have a grade C because it's a really young score and I lost one of my older ones. And so, keep your oldest accounts. Those are great. Keep the newest accounts unless we're seeing some really horrible fees, and we'll talk about that. How often do you use the account? Do you use it and keep it active? So I need to use credit cards periodically to keep them active and to show activity on them to improve this and show it's still an active score. So I don't care if you put like 1 tank of gas on it a month and then pay it off. You've used it, it's stayed active. Your oldest cards look active. One of the guys that we have come in to talk about finances with y'all, especially to our 4th years for a mandatory session, he talks about his Bank of Travelers Rest card that was the first one he got when he was 18. And he keeps it active because it's bolstering his credit score a lot. And he's like, I use it for one thing a month, and I pay it off immediately. He's like, I have my other cards that I use for points and things like that. And he'll talk all about how to do that, and he's pretty good at that. But you do need to keep them active. Until your card or until your account is 8 years old, it's considered immature. Once it's 8, it becomes a major bonus. At about 3 to 5 years, it becomes a moderate benefit. Prior to that, it's a detriment to your score. It's not bad to have, it's just a detriment to your score. Your scores are up and down all over the place, and it'll change every month pretty much based on small, minute things that I don't even understand, and I'm teaching this right now. But how old is my credit card? How old is my account? I'm not saying don't pay off your car loans. I'm not saying you need to jump straight into a new car loan. That'll actually hurt your credit score for a little bit. But credit cards especially, if you've got an old one and it's good, there's not like the $600 fee that American Express likes to charge. Well, okay. That's a good old card to keep active. Even if you aren't getting a lot of points on it, you can talk to them about switching it to a new product on the same line of credit so that now you can start getting points. Maybe you're on a student card right now. You can switch that student card on the same line over to a traditional card, over to a points card or a cashback card or whatever benefit card that you want. And so you get the longevity of the card with the benefits of the new programs that are out. Again, more Thursday. Credit mix. This is another area that for the longest time, if I had my old credit report, I was getting dinged on because I didn't have any credit scores. So that one that's like AAAACA, it used to be like ACAAA because my accounts were old and I just didn't have a variety of credit. I didn't have credit card. I don't have retail accounts. Those are kind of interchangeable these days because, again, retail accounts have largely gone away with all the major credit card companies. Installment loans, that's your car loan, that's your mortgage. Those things show up. Finance company accounts. Do I have a HELOC, a home equity line of credit? Do I have mortgage loans, which still are installment loans but treated differently because they're generally much larger? So all of those things, the mix of your credit is that last 10% that they look at in building your score. And we're not saying everyone needs an 850 score. I don't know, but maybe 2 people I've ever met that at any point have had an 850. And they always brag on it, by the way. If you ever meet one of those people, you will know that you met one of those people. It's like, how do you know someone went to Harvard, right? They'll tell you. But, anywho, so how do we improve your score? Funny how that first one keeps coming back up. Pay your bill on time. It's still common sense. It's what we talked about. If your utility company is going to report to the credit bureaus, please let them. If your landlord is going to report to the credit bureaus, please let them. It shows longevity. It shows you making regular payments. It's treated like an installment loan on these things. And so that builds your history in terms of time. It builds your different types of credit all together. Pay off debt and keep balances low. So I'm not saying fully eliminate and cancel credit cards. Again, those help you because you get them, the older it is, the better. But pay off any debts that you have that are on revolving accounts. Pay down your other debts on time. You can pay them off. You saw what happened to mine. I took a 23-point dip. But it's back. It bounced right back up 3 months later. Keep new accounts to a minimum, only when necessary, and at a max 1 per year. It's recommended you don't apply for more than 1 credit card per year if you're going to even do that. And I still would say you don't need 1 credit card per year because at y'all's ages, that would be somewhere between 5 and 6, maybe 7, 8 credit cards that you would have been up to now if you were doing 1 a year since you turned 18. Don't do that. That's a bad idea. I'd say keep at most 3 credit cards. If I'm applying for a mortgage, I'm probably not applying for a credit card that year. If I'm applying for a car loan, I'm not applying for a credit card or a mortgage that year. Or if I have to apply for one, I'm just aware of that and I'm going to prepare accordingly. If you see an inaccuracy, even if it's helping your score, dispute it immediately. That is a key thing. Do not ever forget that. All right, timelines. How long does something stay on there? While we're doing that, I'm going to go and remember to advance that to the survey. All right. Credit inquiries stay on for 2 years. If you apply for a loan, credit card, mortgage, whatever, that inquiry, simple fact that you applied, whether or not you took out the loan or the credit card or not, is going to show up on your credit report for 2 years. It's going to be there that long. It's going to be, really, realistically, your score is going to bounce back after about a month or 2. But the fact that you applied is going to show on there for 2 years. Part of that is just so that you can keep track of it. You can make sure that there's no one applying falsely under your name. It's a safety issue. But it's good to check that. It's good to keep track of those and go, hey, yeah, no, that one, I don't remember what that one was, and go back and figure it out. Sometimes you may find out it was actually you. Hopefully you don't have any hard hits on your credit that weren't you. Delinquencies, items of public record, divorces, marriages, anything that shows up. If you bought a house, even if you paid cash for it, all items of public record. If it's stored at a county courthouse somewhere, it's an item of public record. Well, that's going to show up on there for 7 years as an address. And it's one of the ways they actually have you verify that it's you, is like, which of these addresses did you live at in the last 10 years? So remember all of your apartments and stuff from college. You'll be needing that to get into your actual credit report. Bankruptcy's 10 years. And y'all, there are no shortcuts. There's all these credit things that are out there. They're just ways to get your money. There's not really any ways to overnight improve your credit score. You can do some smart things. If you're already doing good with your credit, you can improve it even more. But if it's bad, the only way to get back to good is the long, steady road. So the best bet is never let it get bad. But if you're there, get back. Make sure you're on track to be getting back to where it should be and to a good score. Because you probably won't need it while you're in med school. But after medical school, you're going to be applying for new housing. And yes, you can probably do that in large part based off of your contract as a resident. But why do landlords not like people with bad credit scores? Why is it harder for folks, not y'all, why is it harder for folks with bad scores to get housing? What do you think? Yeah, they're less likely to pay their rent. You're already not paying your other bills. Why should I trust you to pay me the rent, which is going to be your largest expense each month? Yeah. Even though, of course, your rent should be your first priority in your budget. Got to have a house before you can have food in the house, right? Food is now my second priority, which is odd to say, but you need shelter. You'll die of exposure faster than you'll die of starvation, just to be horrible and blunt about it. But yeah, there's really not a lot of shortcuts. So I'm going to put this up here for you all to do the survey, but I'll also see what questions you have. Yeah. Mm-hmm. Yep. So if you're going for loan forgiveness on your student loans, does it not look as good as paying it off? So you're making the on-time credits. So it's still counting as an installment loan and showing you're making those on-time payments. What we found in student loans, are, just like hospital bills, are treated differently on credit scores. And so I don't know why they're treated differently. Like if I was creating it, I'd count your student loans against you. I'm just to be honest. But no, as long as they show you're making payments, you're not going delinquent, which is over 270 days late. It doesn't tend to have a negative effect, and it can have a positive effect on your score. We've not seen any of our grads have any issues securing future credit because of their student loans. Yeah, as you're entering residency, they'll want the statement that says you're eligible for a forbearance, but that's really it. And even still, if you're eligible, it doesn't mean you have to take it. So I'll write them that letter all day long, but then I'll tell you to make payments.
I think this is more of a Thursday question.
Okay.
But,
credit card question?
Yes, yeah. So if you want to put a like a big payment, $1,000 payment on your credit card, right? And you can't pay it off right away, so you know you're going to pay the interest fees.
Yeah, why are you buying it then?
Yeah, well, exactly. Is the rewards better than the interest?
No, rewards are never better than interest.
Okay.
Your rewards are going to be pennies on the dollar.
Okay.
Your interest is going to be quarters on the dollar.
Okay.
And pretty much the interest fees are just going to destroy you.
Okay.
And never outweigh. 1,000 points on a credit card is worth $1.
Gotcha.
It's not worth all that much.
Okay. Cool.
And that's some of the better credit card points. All right, other questions? All right. Y'all please fill out the survey. It's can you read the passcode? I keep forgetting to change the color for this screen. I am so ready for the upgrades to this room that they're doing this summer. All right. Y'all grab an extra burrito on the way out. I will say, though, the queso's mine.